Good morning, everyone. This is Srikant Rajan. Welcome back to the Stock Market Podcast from MP-invest.com, the only community where you get guided assistance to invest in stock market, bonds, mutual funds, fixed deposits, and all kinds of insurance. If you're not a part of this amazing community yet, visit our website MP-invest.com to join the free investment community. Coming to stock market, the Nifty touched 17,936. So in fact, the Nifty did go up very close to 18,000 again yesterday, but then the last 1 hour sell-off was something that brought Nifty back to 17,936. Well, the FIs are continuing to buy, the positivity continues here. They are investing, they bought for 2,049 crores yesterday, while the DIIs have sold for 890 crores. Of course, no surprises on that. But after that, what happened is important. Well, things were kind of looking good yesterday. If you see, Reliance was also moving up after they have taken over the polyester company. And we could also see, Tech Mahindra and all IT stocks kind of recovering. Tech Mahindra is in fact one of the top Nifty, 50 gainers, Nifty 50 gainers. And similarly, Titan was up by 2.48% and Axis Bank also was up by 1.96%. We even booked out profits on that. And with all that, banks of course were doing good and things were kind of looking good, everything until the market closed. Yes, so after the market closed, what happened? Well, as expected, the Indian CPI, the Consumer Price Index data came, which is of course a data that tells us about the inflation, and it has again peaked. Yes, it has again gone up. In fact, it has touched 7% again against the expectation of going lower, which was something that should have happened. But why is it happening? So we did see the crude oil prices coming down, and that's exactly why we had expected that the inflation might also come down. Now, if the crude oil prices have come down and fuel prices have eased slightly, but still the prices have not, the inflation has not come down. Especially, it is noted that this inflation has gone up high on the cereals. So that means one could be the transportation, that could be one. But second thing is also that we should be actually thinking is, are people also responsible for this? Yes, each one of us might be responsible for this, because what has happened when the inflation was rising, we've got used to the higher cost of buying cereals, which is a daily routine stuff, isn't it? And once you got used to it, we don't even question the shopkeepers why the price is high or why isn't going to reduce, and we just keep buying on a regular basis. So it could also be happening that the sellers are not reducing the prices in spite of a lower cost to them, because they know the people have got used to the price. So we are also partly responsible for the inflation going up. So that is one concern that we need to see, and of course that is something that needs to be watched today. But then what is happening globally? The US markets continue to grow. Yes. In fact, we could see the US markets rallying yesterday also. In fact, today we have the US market CPI data coming. So that is something that we would be cautious about. And, we are seeing a major bullishness because of US markets closing in green. We can see some bullishness in the Asian markets. So as I look at Korea is up by 2%. And if I look at Shanghai, is kind of flat. Nikkei, Japan is up by 0.31%. And even Hong Kong is up by 2.69%. So there is a positivity in the Chinese and Asian markets, which is actually giving some positivity to SGX Nifty as well. And SGX Nifty is already above 18,000. So that is something looking really good. That means probably we are going to see a major gap up opening. Of course, this is a report that I'm doing at around 6:35. 640. So this might change by the time market opens, being Tuesday. I am off for the BNI meeting. That's the reason we are having the early market report. So based on that, this may actually in SGX is indicating almost a 100-point gap up, which is not good in this kind of situation. We might even see people kind of booking profits as soon as the market opens with such a big gap up. But one good thing is, I would say, it is going, if at all it opens above 18,000, it is going to give some confidence in breaking 18,000 soon. So that is something that can be looked forward to. So apart from that, if you look at some stock specific news, ITC continues to be in news as they are planning to open a new property every month because of the unprecedented demand in hotels that's coming up in India. So with a lot of companies expanding, a lot of interest from the foreign countries, There are a lot of requirements for hotels also. The hotel prices are also shooting up. We can see most of the hotel stocks still going up. So that is one good thing actually for ITC, and that is going to be again a positive for ITC. Already we know ITC has been hitting record highs every other day. So that is something really good. Apart from the cinema stocks which we were talking about, which we were making fun of on our Sunday meeting, are finally kind of rising back. It was up by almost 4.8 to 5%, majorly because now there is a report that states that Brahmastra has actually crossed 200 crore mark in worldwide market. Okay, so that's something good that side. No comments there. Going on, we will look at what is going to happen in the market. Like I told you, if at all we see opening above 18,000, that may not sustain, and that's something that needs to be seen. And if at all it closes, so that's something that I'll watch. If at all 18,000 is broken in the opening, and then if the selling comes in, and if it breaks 18,000 and comes down again, there are chances we might see levels close to 17,700 to 17,800 soon. So that's something that needs to be watched. But if it takes a support, if you see, the rally in India is led by FIIs only. So FII buying is continuing on a regular basis. If at all, FIIs are continuing to buy, especially the IT sector, because which is at a lower valuation right now, there are chances that can actually further rally the market. So if that is the case, 18,000 could be broken. So that is something that we need to watch. Will 18,000 be broken today is the major question. So with that, on the lower side, I expect 17,700 to 800 as the major support. And if that is broken, which I don't expect to happen today, but if at all that is broken, then 17,500 on the lower side. But on the higher side, 18,000 will continue to be a major resistance. Let's see if 18,000 can be broken on the higher side. So even that is broken, then 18,200 is the next level. So, that's something safe enough for this expiry, I would say. So with that, this is Srikant Rajan signing off, wishing you all a great day and a great week ahead. With that, we will catch up more with more details on the podcast tomorrow morning. So before that, if you love the content that we share, do press the like button and share this with your friends to help them learn and invest together with us. Goodbye. Have a great day.